All right, guys, welcome to March 22nd's pre-recorded Zoom, and pretty much picking off right off of Friday. Start off with dollar. I'm going to delete all the brushes. Okay, cool. So we know pretty much what we were looking for last week, which was a reaction via potential POI. To maybe take out to take out relative equal lows, which would lead into a pretty much an overall transition, and I'm still pretty confident in that, especially because this is a very big zone of interest. Relative area of interest, our invalidation is pretty far away. So we had seen the initial reaction, and let's actually highlight those POIs. It was, I believe, M15-ish. Yeah, it was in confluence with the open almost. Right here. And we also know about our H1 there, but you guys already know about that. So I'll just do that for clarity purposes. So we know we got our initial reaction, but we know that reactions don't always create follow-throughs, which is why yesterday morning, let me pull out this message. It was yesterday in the morning. Which was here, and the question was whether or not our original bias would hold overall, but this was the pretty much trying to play devil's advocate here, pretty much trying to be dynamic, trying to play the opposite direction. And as you can clearly see, although we have the internal reaction, technically our last solidified low is here, right, based on previous low that was taken out into a new high. So low into high into retracement, so there is momentum, meaning there is technically bearish movement inside. So you would need a bullish conversion, right, in order to assume, right, any type of reversal based on what or pretty much any type of counterplay based on what your original bias was. As you can see, the M15 candle is right there, and in result, excuse me, in result, right, you can clearly see, right, one of three things can happen in a POI, which is, right, open 50% or the liquidity grab. Now the security of each scenario it obviously varies based on scenario, just because there is multiple catalysts that pretty much create those moves. So after the liquidity grab of the POI, you see the reaction occur, right? Open, right, did not take out preliminary structure, and here, right, this high leads into the low that is taken out alongside preliminary structure, and this is a high sign of momentum, meaning, right, the invalidation would be down here. Doesn't matter if you want to take inefficiency, wick, or wick, the invalidation is the same. And that's pretty much what's kickstarting this move here, and that correlates with our EURUSD scenario that I showed you guys yesterday, just because pretty much the bias had kind of changed. And the reason why the reason why I was looking here first for a EURUSD M5, this was actually signaling the wick, but this was the wick was internally something else, which was, I believe, M15. Yeah, M15, right? So in the morning I had set my my alarm here. I don't know if I have the log for that, maybe, who knows. But I had my alarm set here. I'm sorry, here, yesterday morning. And this, right, obviously the inefficiency fill, and then right? Obviously trying to play the open being here. So it's pretty much what I was signaling, which is the open of that. And I believe there's something internal as well. No, just the M10 inefficiency. But within the range, right, that is obviously the bias, but the entry, you can easily see here. And this one, I'm gonna be honest, I got a bit lucky with it. Over the pretty much past couple of years, I used to take scenarios like this. Over the past pretty much almost 2 years, I used to take scenarios like this, right, and have them fail. And just today, or this scenario particularly, I had to ask myself, where is my invalidation? So I know, right, that there is internal momentum at first, right? And that's okay, because if we're looking at this from a structure perspective, right, we're looking at obviously our solidified low here, relative equal lows. We're taking this our solidified low into a high that's solidified after previous structure. That's into here, low, high, low, high, low, high, low, high. That's break of structure, meaning that is now our solidified high based on solidified low. So this is just a pullback of that. So this initial reaction I don't really care for too much. So this led into the liquidity grab. Why? Because structure is still bullish. So it's until after we see this and this till we see a confirmation, aka liquidity grab. The liquidity grab, right, is more of a model-based approach, whereas if you're just trying to trade these continuation breaks or structures, it's just me seeing that you're just probably trying to trade the market for what it is, and you're just trying to consistently adapt, which is okay, but you guys know that's not how we operate here. You know, we like to be a lot more model-based, just because of what the model represents. So within this range, we can even see that there is another internal liquidity here, and that's what led to the fall that broke a very significant solidified low. And that's what's important there, because that signifies the full change, you know, in direction and momentum and order flow. So I know my invalidation is up here. This is my invalidation. All right. So my invalidation is here. So I said, instead of, you know what, it's already, yeah, it was already about 11. I wasn't even home. So I said, you know what, if I'm either going to miss this or I'm going to get the trade, right? So this is pretty much my parameter, right? Because I know that no matter what, if we are bearish, this high will not break. So, but I know that if I try to attempt to trade here, my stop loss is going to be very, very big. And there's a chance that, you know, I might not even be able to, you know, get a successful trade. So if I'm going to set a limit, if I'm going to leave something behind, it's going to be at a very outermost position, to where I know that if my SL is hit, it is a very, very small area of interest, right? And pretty much if it's going to win, or if it's going to be a good trade, then it's, you know, not going to meet the invalidation. That's why you can see here, I believe 4 pips, 3 pips, 2 pips there. Yeah, 3 pips if you're, 3 to 4 pips if you're willing to go for the full structure invalidation, right? I'm going for the order flow invalidation right there. So that was pretty much what I was looking for. Targeting right, it wasn't a 2, but I'll just set it as a 2. It wasn't a 2. And that was pretty much targeting, right, our major low here, and that's already a 1 to 20. And after that, I believe I was here when I had finally seen it, because it was late Asia session, yeah, right there. I had pretty much just taken my partial there and just went to sleep. But as you can see, right, the reason why I took my partial there is because, one, it's a big point of liquidity, but two, right, let me actually take all this stuff here. Okay, so the reason why I was worried is because, one, we had already taken out a pretty major high, right? And although that's not a substantial new high, I don't want to keep assuming the bearishness, because at the end of the day, that is a bullish break of structure, right? Even if it is a liquidity grab, it is a bullish a bullish structure break. So I know that internally we are bearish there, but I want to be worried about this here, and I believe we had pointed it out last week. I'm not too sure, but I think we did, where this would be very, very important because one, you can see it's a quick move, you can see it took liquidity, you can see it created a new high, so there's technically money in there, so that follows the SC criteria. So that means that internally within that space we could see a reaction. That's exactly what we're seeing right now. But because there was a structural disruption present, right, I'm not giving up on the bias just yet. Not just yet, maybe soon. But let me elaborate with that. For example, here's the structural disruption, right, where we see pretty much the failed reaction when that pretty much comes and breaks the previous low, and that's pretty much where our idea had originated from, based on the structural disruption there, and targeting previous low, and that was pretty much achieved. All right, but now where it's pretty much problematic, right, where we saw the reaction here last night, because we've seen that, right, we have now came into a bearish POI here, which was relative to our entry. So that has been met. The 50% was perfectly met there. Right, because internally we are about to break a previous structure point, that kind of argues the bearish, argument, but where I'm pretty much just wanting to go 100% against that is what the break of structure here means, right? That break of structure pretty much signifies, right, unwillingness internally here. So that's now low high or low high retracement, right? Because internally low high, low high, low high, low high. Technically, internally, this is bearish, and this is the first time we're seeing a full break of structure internally. So that's pretty much what's making me worry, and thinking of that unwillingness potential here, where in reality we can really just come back into a previous turbulence point, right? Specifically, I don't think we'll bounce off of the structure point, because that's kind of what wanted to happen here. It just didn't. But anywhere here, I'd like to see how we will react, right? You see the inefficiency in play. I wonder what will happen here if there's any type of bullish conversion, maybe over tomorrow night, tomorrow morning, and just seeing what can happen there. And that could be resulting, if you get a good bullish transition, you're aiming for pretty far targets, right? Because this is already over, not 100, but it's about 70 pips away, and your overall liquidity point is 135, which is a very, very big trade. So I'm pretty intrigued to see what can happen there. And in alignment with that, you can see that coming back to DXY, I know we didn't finish with this. We had the first reaction from the POI, but then we had acknowledged that there was a bullish transition here, and the bullish transition had that internal reaction, which is what aligned with our EU trade that I just explained. But the result of that from dollar led us into, right, the H1 50%, M15 inefficiency here. And what's important is this, because that pretty much gives validity to the POI, and it's giving me vibes of that. That's what that's giving me signs of. Because of the pretty much solidified high now, technically I wouldn't see this breaking the POI. It looks like we're really wanting to be somewhat bearish here. So yeah, I will be looking for that hedge here, just to see if we can get some type of big move there. AU, this one's interesting. I haven't touched it this week, but just following immediately from last week, you can see market open here, right? Where the character had shifted, that was a solidified low after we took our preliminary structure, low into high into retracement, right? And all of this is just a continuation. Low into high into retracement, because we break internal structure, right? I'm going to change the color. That means that internally low into high, right? Well, not there, but low into high, low, high. That is the signification of the beginning of the pullback of that momentum there. So technically you are bearish, high, low, break of structure, right? Now this is in alignment with this. So the invalidation is there, and any way for you to take the scenario, whatever your choice is, that is a high probability scenario. But yeah, that's pretty much AU. That was very, very pretty. I'm not gonna lie, it was pretty nice trade, and it happened during London, I believe. Yeah. But yeah, this one I haven't really looked into. I was more so focused on that EU trade yesterday, which was about 50-ish pips. Pretty nice trade. So yeah, we'll see what happens with this bias for Friday, and we'll discuss more then. So yeah, I'll see you guys later.